to talk about mortgage rates in Tampa with Stuart Vener. You are the national real estate and mortgage expert over there. Correct, Stuart? You with me?
Yes, I am. How are you, Lauren?
Oh, I'm good. I'm actually very excited to talk to you because this housing market has been a strain on us for some time, and everybody knows that. Tons of issues with the housing market, if you will, but right now we have a blessing on our hands in the form of a 15-year mortgage rate and a 30-year mortgage rate that are basically at some of maybe the lowest levels we've ever seen. At least I think the 15-year hit a record low, correct?
Yes, it did. It's based on the price of the 10-year long-term Treasury.
Right. So,
and,
with these,
I think there was a little euphoria and relief when they averted defaulting on the national debt. But I think if you look at the total picture, I don't think it's good.
Yeah. But before we talk about the housing industry overall, are people, refinancing their homes right now with these interest rates that are just unbelievably low? Have you seen a lot of refis?
The problem with refis is many people can't refi because they're in a position where they don't have enough equity in their home. Mm-hmm. But if you do have the equity, and if you have an ARM, it's a great time to go get a fixed rate loan if you can do it. Even if you have to add a little cash, grab that fixed rate while it's as good as it is.
Okay, so nothing really is helping the housing market then if you can't even have refis out there and take advantage of these low mortgage rates.
Yes, I mean, the housing market isn't going to recover until the economy recovers. Right now, as we know, the supply far exceeds the demand. And when you hear job figures like today, it's not a good sign for any kind of a recovery.
Because what? Each house creates 3 jobs. Is that the statistic that we go with these days? For every home constructed,
right.
3 jobs are created, right. And so that makes sense that you need a firm labor market to indeed have a strong housing market. My father's in the furniture industry, and I know that's, he's feeling it, and he's been feeling, slower sales volumes for quite some time because he has to wait for the housing market to recover. So if the accessories and the furniture are doing bad, they're waiting on housing. Housing's waiting on jobs, jobs waiting on the economy. It's all a terrible, vicious cycle. So, what do you think the biggest problem is right now? Is it lack of liquidity? Is it the fact that it's too hard to get a home? Qualifications are too tough out there? What's the problem?
Well, qualification has tightened up, and in many cases, rightfully so. I mean, you do have to qualify for your loan. I don't think the United States government could qualify for a Fannie Mae loan today.
Probably not, considering what we just went through the past 2 weeks. Okay.
But I'm afraid if the credit markets tighten up a little bit and our creditors, China, countries that are investing in our securities, if they demand a higher interest rate, that could throw a devastating blow to the housing market.
Yeah, and obviously so, because even with these rates right now, we're not seeing much activity. The foreclosure market,
right.
Obviously a big deal. Tons of foreclosures overhanging the market in Florida, where you are. How do we get them off the market?
Well, I mean, we're sitting nationally with, I think, a shadow inventory of like 4 million homes, homes that the banks have already foreclosed on, haven't put on the market, or in the process of foreclosing. So people that are owning their homes and that want to sell their home, they have to compete with these foreclosed prices. So it's hurt everybody.
Yeah,
when I was in the mortgage business, typically a foreclosure in a neighborhood would be an abnormality. It would be an aberration, and you wouldn't take that really into consideration. But today it's the norm. So a foreclosed price is setting the value for the whole neighborhood.
Yeah, and unfortunately, and that's the other thing. I mean, I know a lot of people newly married, they bought their starter house, and now they want a second house, but they can't get the money that they paid for the starter house, so why would they buy another house if you can't even come close to what you paid for it just a couple of years ago? I mean, these are the kind of things that you hear when you speak to people in all different parts of the country. So do you think that home prices will move lower, or do you think we might see some upside surprise? I know in the housing reports we just got for the month of June, which were the latest, I believe new home and existing home prices both rose. Correct me if I'm wrong, but is that the start of a trend?
I think it's a little bit of realtor hype. It wouldn't surprise me if we had a slightly more of a dip in housing prices. But I do think that if you're a young couple, if you're a family, a first family, wanting to get your first home, buy it. I mean, even if it would dip a little bit, you're going to get a lot of home for the money, a lot more than you could a few years ago, and you can get a historically low interest rate.